Welcome to Markets Now. I'm Michelle Rook with Jim McCormick, agmarket.net. Livestock to the plus side on Tuesday, but mixed in the grains. Corn and soybeans setting back here, Jim. And how much of that do you think was just trying to digest the fear of tariffs? President Trump saying, hey, he's going to put tariffs on day one of his administration on China, Mexico, and Canada.
I think that definitely was a knee-jerk to the downside because of it. Michelle, remember, 6 years ago when we had the last trade war, the prices of the grain market really kind of got hit hard. I think the knee-jerk of the market was, hey, what happened last time was bearish, so I'm going to sell some of my length. But in general, the market did hold it maybe in a little bit better than I think some of the bears would have thought could happen. And that could be due to the fact that we now have essentially a gun.
So the market's held up a little bit better than we thought because you think we're going to have a flush of demand actually coming at the market here before the inauguration?
I think that's what you could see because there is going to be a race to do it. I mean, if you listen to what the Mexican president said today, she pretty much took Trump's trade threat, said, hey, if you do it to us, we will do it exactly back to you until this hurts us both. So, I don't think, unfortunately, Michelle, this is going to be a quick resolution. I think it's going to be drug out for multiple months like it did last time around. So I think in the long run, the trade war is going to be bearish to prices because, when things get more expensive, the buyers of the world try to find a cheaper buyer on the beans, especially. This trade war starts in January 20th. You're moving right into the prime time when beans start getting harvested in Brazil. The US dollar is trading quite high right now. So it will make our beans less competitive to begin with, just to the big Brazilian crop. The trade war just exacerbates that problem, and you start losing that demand, and the market then goes down in search of demand to try to be competitive.
When January 20th hits, does the demand all dry up after that, you think?
I think it will. I think a lot of it's going to depend on, how much gets front loaded in, but and how much the people need. And it also depends on how do the rest of the world respond. Like I said, President Trump-elect has threatened to put the trade tariffs on. We've heard some talk about how the rest of the world might actually respond, but there really has been no actual set of what's going to happen. But I think if you are a producer, you got to be prepared for the worst, unfortunately. And the worst could be essentially a tit for tat type of trade tariffs that essentially price us out of the world market.
Did grains also see some position squaring ahead of the holiday, and it's going to be end of the month on Friday, and we got first notice day?
You definitely saw some of that. I mean, look at the wheat market. It came off the lows a little bit. I mean, if you look at where the funds are, right, Michelle, right now, it is a little bit interesting. They are long corn, but they're short the beans, they're short the wheat, they're short all the wheat complexes, I should say, the beans, the meal, and the oil. They're long the corn, so maybe a little bit of balancing. But I think keep an eye on that long corn position. I do think now the funds essentially have managed to get this market high enough for most of the puts to expire worthless that the producers bought as a way to insure their crop. Those puts have now expired worthless. I fear that as we wrap up the calendar trading year from now to the end of the year, you're going to slowly see that fund position peel away from that net long and maybe join the net sell or short position, I should say, like they are in all the other commodities. So a little bit of downward risk potentially if these funds decide to want to get out over the next couple of weeks.
Jim, what could this whole tariff situation mean for the broader economy? It's not just going to hit farmers, it's going to hit consumers too, isn't it?
It is going to hit consumers. I mean, the reality is this, Michelle, when we place tariffs on products, it is inflationary. The importer is the one who buys. The importer, the company bringing that product into the United States, is the one who's paying the tariff. It's not the exporting country, it's the importing. So if you look at the tariffs coming in from Mexico, he's talking a 25% tariff. That means your automobile could be 25% more. A lot of parts of an automobiles are made in Mexico. That part is going to cost 25% more to bring in. Another big interesting thing is crude oil. We pump a lot of crude oil in the United States. We're actually a net exporter. We're exporting 3 million barrels a day. And President Trump is encouraging, the more production to come. But we also import a lot of crude coming in from Canada. And most of that crude that comes in from Canada is processed here in the Midwest and used in the Midwest. So potentially you're going to see a 25% tax on that crude coming in from Canada. And more than likely, you know how that goes, Michelle, that tax, that cost increases, they're going to pass that along to the consumer on the gas station. So you're going to see more inflationary on the energy side of the equation. And inflationary is, never good for the economy. You know what happened the last, few years with inflation. It was very tough on the American consumer.
might make the Fed have to pivot here too, which what would that mean for the stock market and everything else? Because we always talk about money flow impacts everything.
Well, exactly. I mean, right now the market in general is trading near the highs because the anticipation is the Fed had inflation under control, which was going to allow them to continue to make rate cuts over the next couple months. If we start seeing an inflationary play, be it man-made by the Trump tariffs or just whatever it may be, if you start seeing inflation, I think at best you're going to see the Fed pause on their interest rate cuts. At worst, they could theoretically start raising it again, which, you know, what happens when that does, it makes everything more expensive. It's going to make the farm loans more expensive going into the 2025 planting season. So there's a lot of uncertainties. I mean, one thing I'm going to stress, Michelle, is a lot of this is just guesses by us and by the market right now. We are anticipating what President Trump says he's going to do, but technically he hasn't done it yet. And then the guess is how the rest of the world's going to react to it. So a lot of uncertainty, you know, as we go into 2025.
Cattle market, we made new highs for the move in the feeders. The live cattle futures have not responded as favorably, but a lot of this is the market sorting through what's going on with New World screwworm and the fact that we have shut down the border to Mexican feeder cattle imports, right?
You nailed it. That's what's going on. What's interesting is they're saying it could take a month and a half to get this problem with the screwworm fixed up, fixed out of Mexico. And interesting enough, that'd be right about the time, potential 25% tariffs on every livestock coming across the border come into play. So maybe you're getting a little bit of front running of that, and that's supporting the feeders. I'd say the fat cattle's a little bit disappointing. They're not reacting near as much as the feeders. And that may be to the point where essentially the market's thinking, you know, the consumer is still pushed right now to the brink. We know credit card debt is at all-time highs. And let's face it, Michelle, we're in that Christmas season where some people are going to have to make a decision. Do they want to maybe go out to eat to that high-end steakhouse and pay a lot of premium for beef? Or are they going to buy an extra present or two for their kids? So, the beef market seems to be struggling with that notion. And lastly, remember, Michelle, the headline of the tariff talk was Mexico and Canada, but Trump is talking about adding an additional 10% onto the tariffs that are already in place on China. And we do export a lot, not just grains, but a lot of protein to China as well, which will make it more expensive for them to import our products. So, the concern is pretty much across all the ag spectrum.
And hogs actually shook off the news of the Mexican and the Chinese tariffs pretty well here. We actually scored some new contract highs in the deferred contracts again here.
Could be same situation, a little bit of front running tariffs, looking for extra demand to show up over the next 6 weeks before the tariffs get instituted. Some of it could be long-term demand aspects. Like I said, if we start having to raise interest rates and the stock market starts to weaken and people get unnerved on the economy, you tend to see people shift away from beef and down to pork or chicken. So maybe getting a little bit of support of that. There's just a lot of balls in the air right now as we're trying to digest as an industry which way this market's going to go.
Thanks so much, Jim McCormick with agmarket.net. That is Markets Now.